Everyone, welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk about some of the big stories that are heading our way this week. We're going to look at our economic calendar for later in the week. We're going to talk about a couple of issues that are coming on the direct horizon here that stem from the U.S. government shutdown that could bring massive uncertainty to the markets. And we're also going to take a look at a few trades that are pretty darn good. The gold trade today was a pretty good one. I think that we're in for a real nice rebound off of that key level that we showed you last week several times. I'm going to go ahead and go over that. We're also got a new trade idea out that we want to cover, and that's on the Great Britain Pound Aussie. We've got a Forex watch where we're looking at the Aussie Kiwi. We're looking at the Euro CAD, the Kiwi Yen, and then also the Euro USD. We've got a few levels there, mostly Fibonacci stuff. And then we're probably going to take a look at maybe that 920, maybe some swing trades if we have time today, looking at the tech world this week. We've got another big list of earnings reports that are coming out of the U.S. tech market. So a lot going on today. Last week, we finally got an economic report. Came out of the United States government for the first time in a long time, and that was at U.S. CPI. So I want to welcome everybody back. I think it's going to be an interesting week to be on the market. So we had a great stream last Friday. A lot of folks joined us there, so I really was happy that everybody got in and got their questions answered, and we pointed out a few winners. We had a couple of trades on the 9 EMA strategy that went okay. They didn't go real great. We had a pretty good move in that U.S. tech before it rebounded against us, but productive. I would say a productive scalping session. This Thursday on our Switch Markets Live webinar series, we are going to be doing the 9 EMA scalping. So we're going to do some of that live, and then we're also going to take a look at a few different ways potentially to establish confirmation there with the 9 EMA. So good to see everybody back. Let's see. Team Marina, good to see a team. Always welcome. Let me see M. Bell. Hey, bro, coming from East Asia. Good midnight. Wow, East Asia. Can't beat that. Here in Montana, United States, I'm looking at about 11 o'clock in the morning my time, 1 p.m. Eastern. But if you guys are in the middle of the night, I sure appreciate you dropping in. I know that a lot of places, Monday's already done, and we're already looking at Tuesday. Remember, if you're a Switch Markets client, you're going to get the newsletter beamed out to your email, and it's going to be coming tomorrow morning before it's going to be tomorrow morning my time. It's going to be tomorrow before the UK session gets underway. So we're going to have some picks of the week. We're going to have some analysis, so be sure to check that out. A lot of great feedback on that, so that's absolutely good. It's good to see you. Yeah, let me see. Blue Mango. Hey, Tesla, baby. Tesla's rocking and rolling. We'll take a look at Tesla, Blue. Why not? Let's see. Dave F19. Good to see you. Dave Tuku. Gordon Williams. All right, guys. Let's go ahead and get on. Let's start out with our Forex blitz here. We got a few pairs that are very, very popular today that are being hotly traded. That's what I would say. You've got a good look at 4-hour chart here facing the Aussie Kiwi. I really like this pullback level. I think this is fantastic market structure. Really nice off of that low. Now, there's a couple of ways to trade this. You could go from this low down here, and by doing that, you sort of expand your range. I don't think that we need to do that. I got a question about the Fibonacci, Shane. I don't understand where you begin and end these things. This is a situation where you could go off of that spike low because that coincides. It's a daily low as well from last week. You could do something like that. I would rather stay more current. Most recent spike to most recent spike. I want to go off that swing low right there, right up to this tippy top, that spike high there. That's going to give us a different level. So let's go ahead and just back this Fibonacci off. Go ahead and give it a click. Hit delete there. This is your MT5 platform. We're going to go right here with our Fibonacci's. We're going to go to our spike low there, and then just go drag and drop right up to our top. And you can see right there, 38% is somewhere right around, 135.75, somewhere in there? 135.56, excuse me, I got it backwards. 135.56 right in that zone. I think you could be in for a pretty good bid, maybe 135.59-ish, maybe 135.60. Pretty good zone. So I'm watching that closely here in the Aussie Kiwi. Nice big breakout, though. Really a robust move, really beginning yesterday's session. That Sunday open here in the United States, be a Monday open for a lot of you wherever you are in the world. But nice big move to the top side. That zone right there is very, very good. So I wouldn't ignore that one. Euro CAD on the monthly. This one's a little more challenging in my opinion. You see, you sort of have a doji month setting up here for October. So what do you really want to try to get accomplished? Well, I want to buy pullbacks. You can see that we've been trending higher pretty much the entire year. A couple of red months, but green to red ratio is overwhelming. What is it? 4-2, 5-2, 7-2, something like that. So you're definitely looking like you're having a pretty good year by just showing up and buying this pair each and every month. Well, we're Euro CAD. We've got some interesting things happening in the crude oil market. There's some geopolitics that are coming across the board that really look to be supporting that market right now. I still say the big sell-off's coming, but we'll talk about crude oil here in just a little bit. I still like my Fibonacci retracements, though, on this approach. Nice spike low. You can go right up to that spike high. You can see that you got a retracement level there, but it's way down the queue. the odds are you're not going to get that anytime soon. So unless you don't want to sit here for the rest of the year waiting for a big pullback, we sort of have to get more current. In my opinion, I would be very, very cognizant of what I was doing with regards to my trade location. Very rarely would I play against a trend that is as steep as it has been for 2024 in this pair, this Euro CAD. However, if you're interested in taking the trade, you probably could build a case maybe to take a short. You could take a short building off of this doji month, maybe just put your stop loss up on the top there. But you can see right here, what do we have, 165.10, something like that. Looks to be our top side. I believe that's it. Yeah, 165 flat. So that's going to be sort of your big number. I would be very careful going long just yet. The trend is there. I'm not arguing with that, but I don't like the way that this market is absolutely slowed down. And I know that I don't like the way that crude oil is influencing the Canadian dollar. We've got a lot of big-time events out this week that are going to sway interest rates as well. So we definitely want to be aware of that if you're trading this Euro CAD. For me, I don't know that I would be trading it. If you're trading it, great. If you're long, great. If you're short, great. For me, I'd probably be staying off this trade at least until November. And then potentially taking a short, maybe locking in my stop loss above October's high. So we got a little bit of a late rising crowd. That's okay, guys. Let me see MN, live from India. Good to see MN. Welcome. Shane, how's your view of the mountains? You know, it's pretty good. I mean, it's all right. We had mountain views in the last several houses that we've had here in the Montana. We had some amazing mountain views. Here in Dillon, Montana, we're sort of in town, so we don't have the great views. But if you drive, I don't know, about a quarter mile that way, you can see just the massive Rocky Mountain front up towards the Continental Divides right over there. So it is pretty impressive. So we got some pretty good mountain views. We also get mountain weather. But no, we've had better views, T. This place doesn't have the best views in the world, but it has a lot of other things that are really great. So you can't beat that. Let me see Tina. Good to see you, Tina. Welcome. SV, morning all. Morning all. Andrea Garwal. Good to see Andrea. Ralph H. Always a pleasure, guys. Any questions at all, be sure to ask. We're going to start moving a little bit quicker, though. I've spent too much time on those two pairs, but we're going to go ahead and get it going. Let me see. Nico Letterman. Hello, Shane. I've got a question. How do you determine the area of fair value in significant big figures? Yeah, the big round numbers, we did a webinar on that not too long ago. You ought to go back and check out that webinar. It shows you key levels, big round numbers. For me, big round numbers are just going to be the big round numbers. I mean, it sounds stupid, but really, like $100 in crude oil, $50 in crude oil, $60, things like that. In this particular market, I would be looking at 165 flat as being a big round number. I also like quarter handles. So, like, let's say we were going to go up in increments of a quarter. You'd be looking at what, 65, 65.25, 65.50, 65.75, 66. That's what I would look at. The biggest, roundest numbers, though, are those even figures. So I always like to use crude oil as an example, $100 for crude oil. The NASDAQ, 25,000. And then our next one probably be a 25,250. 25.5, 25.750, and those are just big round numbers. Those are key areas. Now, areas of fair value, it's a great question. I'm not even sure where the rectangle is here on this MT5, but you can see this area right in this zone. Notice how the bars, the bodies of the candles overlap, and you'll also notice how tight those ranges are. I call that an area of fair value because the longer we trade a specific area, that's what we call a value area. And that's the reason why is because the market sort of reaches an area of balance. Now, I know that there's terms, fair value gap, and there's all these different ICT terms, and that's great. If you guys like those, go with them. For me, an area of fair value or a value area is one that we've traded repeatedly. You see the market sort of consolidate, and it typically consolidates around a round number, and that's why those two concepts really do go hand in hand, Nico. So definitely, if you're looking for an area of fair value, think about rectangles, something that fits in a rectangle, a consolidation period. Typically, when those bars rotate around a single price point and those bodies overlap, you're going to have a pretty good area of fair value. That's what I call it, value area, fair value, whatever. I like value area. I'm a little bit older, but that's okay. And then as far as the big round numbers, we just talked about that as well. Check out that Key Levels webinar. That'll really show you exactly how to identify big round numbers. We hit it for about an hour doing that. Let me see, Tina, the autumn must be beautiful. Yeah, I got a bunch of leaves in the yard. I'm going to have to get out there and rake them one of these days. Now, we have a couple great big trees and a lot of leaves, but the colors are beautiful, but they're leaving fast. They're leaving fast. Most of the trees have already dropped their leaves, that's for sure. Good to see you. Yes, sir. Welcome, Lita. Always a pleasure, Lita. Okay, let's finish up this Forex Blitz here. Kiwi yen, yen. A lot of folks looking at the Kiwi yen right now. I really like this formation here. This is one that jumps off the chart at me. Nice spike high right there. Monthly chart, nice spike high, spike low. You'll notice we just broke above that 62% level, which is right around that 87.75, somewhere right in that zone, 87.63. That's a pretty good area to maybe be buying a pullback. So what I would be looking to do with my multi-time frame analysis is saying, okay, this is sort of our key level. We had some nice compression there. We pulled back and had a test. I would be waiting right there probably with a bid, something to do to scalp this to the long side. Right now we're bullish. Once you break above, say, a 62% like that, a long-term level, you've got a pretty good opportunity to move a little bit higher. And you can see right there that pullback zone right there drew a lot of bids, and then we moved to the top side. So pretty good stuff there. I mean, I'm excited about the top side of this market potentially. The yen, though, the BOJ is going to say it all. We're going to talk a little bit about the BOJ here in just a minute. Euro USD weekly. This one's very straightforward to me. Spike high right up here, spike low, pullback zone, 38%. We're watching that like a hawk. I think that could be a great opportunity potentially to sell this market. But look how tight it's been this the last few weeks. Incredibly tight. Right there, there's your weekly right around 116. Let's see, 116.83-ish. Man, the font on these things are so small. I have huge screens, and I can barely see the font on this MT5. So right there, you can see right in that zone, 116. 116.88, 117 is going to be really your big round number there. 38% retracement. That's a fantastic area to be looking to sell the Euro USD. Remember, if you want to trade any of these assets and more, head on over to Switch Markets. We've got a lot of value-added things for active traders and also folks that are just starting out. Even if you're not in the game just yet for real money, free demo accounts over there. There's a free trading journal. We've got all sorts of free tools over there. Lot size calculator was one that we highlighted the other day. There's a lot going on over there at Switch. So there's bonuses. There's all sorts of things. Zero commission accounts, tight spreads. The reverse KYC program, you can get up in trading without going through the KYC process, and they'll stake you up to about $2,500. So you got to check that out. Pretty good stuff over there if you're an active trader. That's for sure. Let me see, Nico. Where can I find that webinar? That's going to be on the Switch Markets YouTube channel, Nico. And it's going to be a key levels webinar. And just go to the live portion where you'd find a live stream on YouTube, and just go to Switch Markets on YouTube and check it out. That webinar's over there. We run examples for about an hour. It's pretty good. It's fun. I like key levels. That's one of the biggest inputs to my trading is key levels. So that's where it is. Fall foliage. Yeah, it's all over my lawn. I'm gonna have to get out there and rake it up. That's cool though. It's good exercise, right? Well, I didn't get to it over the weekend. Too much football on. All right, here you go. Huge metal sell-off highlights Tuesday session. This is one that we've had on the board for over a week as far as our trade ideas go, and this is a good one. This is we're looking at right now. Gold, spot gold, weekly chart. Started out on the bear again, and our bid was right down there off of just above our 38% retracement level, and we were looking for about a $35 move. I believe we already got it. Let's go ahead and get out there and take a look. So right here, this is our Fibonacci. And this really reinforces our bullish read on the market. We really believe that gold is going to go up, but we are seeing signs. We're definitely seeing them in the silver market. Silver, I sort of said maybe the trade of the year is 45. That's coming into play for gold. Is this the trade of the year? 39.71 buys. It's a pretty good trade. There's no question about it. We broke beneath last week's low. We went right down to that 38% level. 39.7165. What's the low for today? 39.7145. I mean, that's amazing accuracy. A really beautiful bounce. And this is one of those trades that, can you make a living doing this stuff? Can you make a living trading these levels? And the answer is yes. There's a couple inputs you need, though. You need money and you need patience. It was painstaking. Once we got this top up in here, we've been waiting on this trade to come into play for 1, 2, 3, 4, 5 sessions. Now, the only way that you can really make money and enough money to survive trading ideas like this or strategy like I trade is you got to have a lot of markets going and a lot of levels to play at all times, number one. Number two, you got to have the patience to wait for your trade setup to come your way. You've got to wait. It's if you're committed to this level, this sell-off right here, when it went to 4,004 and then bounced, that probably hurt your feelings pretty bad because you didn't get your entry. And the concept or the discipline really comes in when you don't chase price and then get chopped up right in here, because that could have very easily happened to you, and it probably happened to a lot of traders. But this is beautiful stuff. You can see we swept lower beneath last week's low. We went right down and just kissed our 38% level and then got a beautiful bounce. Let's go down to our 30-minute chart and see exactly how the intraday price action has unfolded. So you'll notice right there, 4,011 is going to be our top side profit target here. And that was for about 3,400 pips, something like that, 3,400 pips, I believe. And you'll notice right here, we're dealing with about a 91 pip spread, 105 pip spread, which is a healthy spread. That's a big spread. So what was our high right here? Our high right here was 4,004, and now we're sort of back right down around 4,000. So you're in a very interesting situation here. You went down. If you got your entry, our entry was right around here. I believe it was 77. You really had a tremendous rally. And so the question becomes, and I get this one all the time, Shane, do you wait exactly until the next level's hit? And I'd say, well, if you're a systematic trader and everything's dialed in with your risk versus reward, you've got a decision to make. You're either going to wait until your profit target is hit no matter what. You're going to put a trailing stop on it, or you're going to move your stop loss to break even. Now, when we take a huge, this is we didn't take any draw at all. We got a beautiful bounce here and then rotated back to the top side. So the real question is what do we do now? Do you take the money off the board? I mean, it's right there. You need price to go in your favor, another $13. You're in the green right now by $20. So you got half the work done. Do you want to take the money or not? That's up to every trader. I mean, I genuinely can't tell you what to do. I think from my perspective, I can't take a loss on this trade right now. Can't take a loss on it. So the idea would probably be to move it to break even. Why? Well, you're going to look for insulation here. Your break even, I believe, is right around there. 77.50 is where we went long. So somewhere right in that area. Is it good enough? That's $20. Could we get stopped out at break even? Yeah, we could. Should we have already gotten paid off? Yeah, probably. This is a big trend day down, so we're fighting a trend day. We're down about 3% there on gold. I mean, in my view, the trade's already been a staggering success, but I understand if you're holding out for the big money. I get it. Believe me, I get it. I just see it as being incredibly risky. And when we get a bump like that or a bounce like that, it's really hard to not take the money. Take a look at our intraday market structure here. 30-minute chart. What do you have on the 30-minute chart? We just hit our 38% level. That tells us when we reject that tells us that the downtrend is still alive and kicking. So if you're going to let this thing play out and you're going to wait for the big payoff, maybe up to 4,011, 4,000 and a quarter, or you're going to take a position on it, then you're going to have to be patient. It may take us days to get there, or it may take us a few minutes. We don't know. But right now, we know that our intraday market structure is down, down, down. And we know that really since the U.S. money got involved back at about 9 a.m. Eastern, somewhere right in there, we've been in a steady sell-off, pullback right there, failure at 38%, and now it's starting to look like that trend is still incredibly valid. If I'm trading today, and I haven't made a trade just yet on gold, the answer is relatively simple for me. I'm not really interested in shorting right here. You could have shorted that, and that's already in the green big time. But probably right down here, you're looking at a secondary bid. That's a pretty darn good support level. I would not hesitate down there again, at least today. But that would be more of a scalp probably. I mean, in my view, you already got a really smoking move right up to 4,004. I mean, that trade was in the green by what, $27, 2,700 pips. It's really difficult to pass on taking profits that are that big. But we're going to wait. We're going to wait and see how this thing pans out. But I really love the level. In my view, that level is pretty bulletproof. But if we take it out to the downside, that's going to tell us two things. Number one, it's going to tell us that we're not just going a little bit lower. We're going a lot lower. And number two, it tells us that somebody knows something that they're not letting on. And they either know something about maybe a hawkish Fed. We're going to talk about that in a minute. Maybe they know about geopolitical uncertainty subsiding. All the market drivers that would bring gold down, somebody would know something. This has been a significant sell-off off of those highs. Right now, we're trading beneath 4,000. I would be shocked if we hold up down here. I would really expect this market to bounce back. But we've got to wait, and there's no point arguing with the market. If it goes down, it goes down. This was still a pretty darn good trade. I really liked it. Let me say, yes, sir. Gold just tanked from the Tokyo Open. It was beautiful. Hey, if you got it, great. That's absolutely fantastic. Let me see. Heyman, hello, Shane, and everyone. Greetings. Good to see you. Welcome. Let me see. Yes, sir. Key levels and trade setups work so well. The only problem with key levels is there's not enough of them. I don't want to be the bearer of bad news. There is not enough $4,000 golds out there. You've got to really look in scope, and that's why we use all the Fibonacci's and we look at market structure and we look at all the volume analysis and things, is to try to identify what's important and what isn't. Is 4,000 really important? I mean, honestly, full disclosure, if you're intraday trading on gold and you're coming off on this 30-minute chart and you're sitting there going, okay, what's a big time level? 4,000 is a big time level. There's no question about that. 38% lines up right at 4,000. There's a lot of reasons to take that short. There's a lot of reasons to take that short. Now, if it's an intraday scalp short, hell yes, you can do it. You can get in there and you can mop up the field with trades like that. That's going to give you more trades. You're going to be making trades like that probably every day. Are they as high probability as the other ones that we're talking about? Are they this accurate? No. Longer time frames and the levels on longer time frames, if you don't take anything else away from these streams, I've been doing these a long time. Some people like the way that I do things. Other people don't. I'm cool with all of it. I always say that as a trader, your creativity is your greatest asset. And that's in each and every one of you. Each and every one of you has that creativity and that inquisitive mind, unless you wouldn't be here. The last thing I will ever do as a coach, as a whatever you want to call me, is to never cramp that creativity, because there's a good chance that you might think of a way to trade these indicators, or any indicators that you find. You may find a great way to trade them that I haven't even thought of, that other people haven't even thought of. And that's what it really is all about, is, looking at the charts, looking at some levels, understanding how price begins to move, how you can apply some technicals to it, and then taking all that and then taking it to the next level. I can tell you when you should be trading and when you shouldn't be trading. I can sort of tell you which time frames are going to set you up for pretty good success and which ones are probably going to chop you up. But at the end of the day, I can't tell you what you're comfortable doing in the markets. That's up to you. That's what it's all about. You've heard me say it a million times. Approach the markets from a position of strength. A position of strength. What is that? It doesn't mean that you're going to be the richest people in the market, because you're not. The institutions have more money than we do. They just do. That's the way it is. I mean, last week they busted a gambling ring in the United States that was they were running crooked poker games and sports gambling scams, and they were over $1 billion. All right, we don't have $1 billion, and that was just one facet of one hustle in one place. How about all the big banks and stuff that are involved in these markets? We don't have that kind of cash, but what we do have is we can be strong in our mindset and our psychology and our strategy. We can be strong in our discipline and our patience. If you can do those things, nobody else can do those things. If you can do those things, you can win. I was reading a guy on LinkedIn this morning. He said he's making $13,000 a month trading. I immediately start throwing flags anytime anybody tells you how much they're making. Typically that's all for show. But there are people out there that are making $15, $20, $25, $30, $100,000 a month trading. They are out there. You don't hear about them, because why? But they are out there. And if you want to be one of those people, it's certainly possible. I will never tell anybody it's not possible, but you're going to have the patience and the discipline and the drive to do it over time. And that's what separates the winners from the losers long term. So intraday levels are great. This was a great trade. 4,001 right here. That's a beautiful scalp to the short. This one down here, this was a better one. So we just have to understand what we're doing and how exactly we want to approach the markets. Now, one thing I do want to check, and then we'll get on to the next market, but this gold has performed very well on the coded 920. This is your 920 EMA strategy. I want to get back over to the gold market here just real quick. Okay, so here's your gold. So we're looking at this on a monthly. Of course, it's just a beautiful thing back in 2023. I mean, you made an absolute fortune. That's a retirement bet if you took the leverage at that juncture. Well, I mean, your rollover fees and things, but if you bought spot gold from there, you absolutely crushed it. Let's take a look at a 4-hour chart for gold, because I'm curious about a few things. Now, remember our rules, very simple. When the 9 crosses under the 20, you're looking to sell. When the 9 crosses over the 20, you're looking to buy. A 4-hour chart on gold's a pretty good place to begin. It's not bad at all. I think that you could probably make a lot of really good trades using this time frame on gold. It's a true 24-hour commodity. That being said, what do we have here? We're still working a sell from about a week ago. Okay, so there's your sell, and we're coming off big. All right, that's fine. What are we looking for now, though? This is beautiful, because on a 4-hour chart, you really, in my view, you don't need confirmation with the RSI. I'm a big believer that longer time frames, probably the crossover's enough, because you're going to have a big enough range to work with on your stop loss. We're in position here potentially to get that to cross back over. And when we do, and if you remember at the time, I said you don't need to, taking shorts here is probably trouble. Well, I mean, it turned out to be a pretty good trade. You shortened from about 41.11, something like that. And then boom, you're coming off big. That's a pretty good trade. Now, if we get this crossover, my eyes are going to light up. So for the next several days, I'm watching this closely. I think we're just seeing a little bit of pre-Fed angst in the metals markets, but I'm still bullish. But you cannot argue with the pain right now. There is some serious pain coming through the gold and silver markets. So you definitely want to check that one out. We do have another trade idea here that I believe very, very basic. Great Britain pound, Australian dollar. Simple. We're looking at 62%. The back end of this, right down around 2 flat. We've got a little bit of a bid in that golden zone, long-term golden zone here on the monthly chart. If you do get a bit of a sell-off, and I mean we are right there. We're not far away at all from this. This market's been moving quite a bit lately. If we see a sort of a late month extension to the bear, we may in fact get an opportunity there. So these trade ideas are available in the How to Trade trading room, and they're also, if you subscribe or if you follow me, actually, just go into the trading room, click my picture, and follow me. They will get emailed out to your email that you use to sign up for the How to Trade service. So doing pretty well on those lately. Those have been pretty darn good. Let me see. Namaskar. Let me see. AI Trader, AI from India. Good to see you, AI. Welcome. Like done. All right. Let me see. I think that when we start talking about this week, there's a lot going on this week. And this is one of those weeks that, we've had traders sort of come and go through the program for a long time. I myself have had some of my worst weeks when we're this inundated with central bank activities. The central bankers are the story this week, but there's a couple other ones that we cannot ignore. Number one, T-bill auctions today. I'm going to look at those briefly. There's no reason to spend much time on them. Number two, Tuesday, CB consumer confidence. We'll talk a little bit about that tomorrow. Consumer confidence is a leading indicator for recession or expansion. We're going to look at that in depth as well tomorrow. Wednesday, the BOC. This is the big one. The BOC, Bank of Canada, and the United States Fed interest rate announcements. We're looking for rate cuts. We're anticipating rate cuts. So Wednesday's a big day. I'll have FOMC live for you. Be sure to join us for Jay Powell's presser. Those are always a lot of fun. I am fascinated to see what Jay is going to say. You remember last spring I was saying he's going to step down. He's going to step down. Well, we haven't seen it just yet. So I'm going to be watching Jay closely for signs of fatigue. He was a very, very tired gentleman in the last meeting. So we're going to be all over him this week. I think that they're going to cut interest rates again. So do the markets. If we do not see that, we will see a major, major correction in a lot of markets. So we're watching that closely. Thursday, BOJ, Bank of Japan, and ECB both act. That's a big day right there. We're looking for probably a little bit of I would say a dovish tone from the ECB, but we're not sure. We're not sure just yet what we're going to hear from the ECB. The BOJ is the big one. That's the one that we don't really know what's going to happen. We know a couple of things historically. We know that the Bank of Japan wants to get back to a negative deposit rate. They want a negative deposit rate in Japan. Why? Devalues the domestic currency, makes your exports hyper-competitive abroad, which with the tariffs, you're going to need all the edge you can get abroad. And then that, in turn, brings in foreign direct investiture. You're seeing a lot of that out of the United States under Trump. This is going to be interesting. I don't know what the BOJ does. They were kind of hawkish last time out. You have a new prime minister there that is promised, sworn to the people, we're going to rebuild a stronger economy. Well, traditionally, the way that Japan's done that is through a weaker yen, what we call a dirty float. All right, there's no negative connotations. It's what they do, dirty float. Well, we got to wait and see exactly how it pans out. I think it's going to be interesting. BOJ, though, that's the big one. ECB interest rate announcements, that's the big one. Friday is the PCE price index. Also on Thursday, we had U.S. GDP. I didn't put it up there because I don't think it's going to move the markets much. But PCE price index on Friday is going to be a biggie. You're going to want to see that one. I think that we're going to be in for some interesting inflation news. As far as today goes, news of the day, we just had some debt instruments that came out, 2-year and 6-month notes. You can see that the notes, typically we have a 3-month note. Today they auctioned some 2-year notes off. Interesting. 2-year note, look at that, 3.5%. That's down significantly from where we sit right now. What about, not a half a point, but about a half of a point, whatever that is. You can see right there, though, we are seeing those yields start to tick down. That suggests that we're going to be dovish, not just for the short term, but maybe the intermediate term, maybe the long term. Interesting stuff right there in your yields. 6-month T-bill auction came down to 3.64. That's down from last week. These are interesting numbers. The yields are coming down as we anticipate more money hitting the street from the Fed. Remember, it's all about money supply. If, in fact, the Fed dives in and decides that they want to pump the system full of money, then that's exactly what they're going to do. And it looks to me like that's what the markets are betting on. Atlanta Fed GDP now 3.9%. That means less than nothing to me. We just put it up there to show you that GDP is coming out officially on Thursday. But this GDP now does show pretty solid growth, but in line with what we expected and the previous release. Not necessarily a world beater as far as an economic figure is concerned. Let me see, Ahmed. Let's see. Hello, Shane. When I'm trading copper, what should I look for as news? Copper's an interesting one. That's actually a great question. Let's go ahead and check out some metals. You can see that all of a sudden our gold market's bouncing pretty well right there. So let's go ahead and check out of this 920 for right now. We're going to do a 9 EMA workshop a little bit later this week. We're going to have a lot of fun with that too. So you'll see right here on an intraday basis, this gold broke above 38%, and now we're rocking and rolling. I think we're going to get paid off there at 4,011. I would be very surprised if we don't get it. Looks to me now that intraday 38%'s gone, it looks to me like you're going to get a big time pump here. I wouldn't shock me at all if we close up there at 4,020 or 25. I could definitely see that happening. Okay, as far as copper goes, copper's a fantastic market, Ahmed. And as far as your fundamentals go, I would compare copper more. I mean, of course, you're going to be watching interest rates and all those things that we watch for gold and silver and things. But copper is, because of its industrial uses, we're taking more and more copper out of the ground than you are taking gold and silver out of the ground. So the idea that you could almost approach copper like an agricultural commodity probably is relatively true. You're always going to want to be looking at current supply and demand figures. You're going to want to be looking at how the miners are, how much they're taking out of the ground, what our global forecasts are supposed to be. Gold and silver, a lot of people do that for gold and silver. I don't. I just see gold and silver's value sort of being inherent, meaning you're not really using too much gold in industrial applications. Silver, you are starting to see that used in the AI, the data centers and things. Copper, though, copper's been a staple of industrial applications for so long that people just expect copper to always be there. And it's one of those things that's probably like, I would make it like akin to beef. You know, when you have a weak herd strength in the beef market, you're going to get higher beef prices. Well, if you're not getting the production out of copper, you're probably going to see higher copper prices. That stands to reason. It's different than silver and gold in a lot of ways. It really is. Now, as far as what would I be watching, I would be watching probably industry reports. I would be taking a look at what the Geological Survey, Global Geological Survey, U.S. Geological Survey. I'd be looking at their yearly projections on how much copper is supposed to be produced, and I would be looking at macro trends. But copper is a fascinating market, and it's one that I really have neglected here. I mean, just because you can't really cover everything. But there's a lot of folks that trade copper, and they're not wrong. I mean, you see, we sort of were doing this jazz here a little while ago after this massive sell-off back in July. And then we started sort of creeping back up, buying back this what I would call a very thin chain. I mean, the sellers came in and just buried this market. I guess you'd call that a negative God candle. Maybe that's the devil candle. But that's just a major wash. And then since then, look at all the days it's taken us to really build it back and start cutting in to just that one-day plunge. So if you want to know what you need to know to trade copper, you need to figure out what happened on the 30th of July, what was announced on the 30th of July, and make sure that you're always watching that, because that clearly destroyed the copper market. It really did. Now, as far as what can we be saying for this year, I mean, this late in the year, you'll notice I'm really leaning on the long-term time frames. And the reason why is a lot of these levels are going to come into play. And you can see right there, I mean, what is that? There's July. So we know we've got a yearly high. We're starting to, I wouldn't say trend, but we're definitely starting to break out and maybe fill in this shadow. I'd be watching that yearly high. The yearly high is up there at 598. That's not a coincidence. Why? Big round number. Big round numbers where? 6. Why is 6 a big round number, Shane? Because it's big. It's a big round number. 5, 6, 7, 8, 9, 10, 3, 4, 5. Those are big levels. Look what we did. I mean, there's just no question in my mind that key levels dictate participation rates and dictate market structure. A lot of folks, they love to study market structure, and they say, well, here's a liquidity sweep, and there's institutions here. I don't know that I believe any of that unless you're an insider. But if it works for you, great. But we do know one thing. The seller stepped up at 6 and they defended copper. They defended 6 against the bidders. There's no question about that. When you go back in history, I mean, you can see exactly how high that price it really is. And now we're sort of ticking higher, looking to fill in some of this negative action that developed back in July. So if I'm trading copper right now, what am I looking to do? You probably want to be long. Let's take a weekly. You can buy pullbacks if you want. To me, the market structure is really difficult because you sort of broke out there, and then you had back-to-back inside weeks, and now you're breaking. Now you're sort of selling off. I'm probably on the sidelines for now in the copper market, but I would be watching 6 very closely, and we're not that far away from it. If we get a big announcement or something, we could be up there. We could be up there on the Fed. We just don't know what the Fed's going to do. So, if you're holding longs, great. I think that's probably the right way to be right now, especially with, interest rate cuts on the way, yada, yada. I probably want to be long, but do you buy long here? I don't think so. Honestly, I'd probably be waiting for a pullback somewhere down in here. And it's not the best Fibonacci. It's not an attractive Fibonacci sequence. Pull back down in there, maybe 495, maybe. You have to get the pullback first, or you can't trade it. What happened on the 30th of July? I have no idea, T, but we better know. If we're trading copper, we better get in our way back machine and figure that out. That's where the trip over to ChatGPT. Hey, what happened to copper on the 30th of July? I would definitely say that. All right, here we go. AI overview. On July 30th, the copper prices dropped significantly following an announcement by the White House regarding new tariffs on copper products. So if you're trading copper right now, Trump G, we're going to talk more about this tomorrow, but there's a Trump G meeting scheduled for this week. They're going to be talking tariffs. They're going to be talking trade war. Right now, Trump's in Asia. That could definitely send the copper market any direction. Absolutely any direction. Right there, 50% tariff on semi-finished copper. There you have it. That's a major mover. So now the tariff angst is sort of subsided. The copper market, you're starting to see it sort of balance out. We took this question earlier in the live stream. Shane, what is fair value? I would look at that area right there. I'd say, what's my key level? 5. Look at the rotation around 5 there for about a month. I would say that's an area of fair value. Let's go to our daily. Very difficult to deny that. Big round number. Okay, it was nice resistance there. Blew through it. Came back down. And then we just started trading. Notice how the ranges start getting really small. Notice the dojis. You got some dojis in there. The tails. You can't establish trade away from 5. Let's see, 1. How many days in a row did it trade 5? There's a big plunge. Okay, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Clearly, your area of fair value is right around 5 there. So that's how I would do it. That's how I establish areas of fair value. Do you want to buy 5? Yeah, probably, if you get a pullback. Be careful, though. Trump, if you're trading copper, Trump's in Asia, and if they announce new tariffs or if the trade war escalates, anything can happen to that. Absolutely anything can happen to that. Lebo, good to see you. Lebo, welcome. Let me see. Nico, do you use Bollinger Bands in your main strategy? Yeah, I use them pretty much every day, Nico, and the reason why is they show me market state. So like just by this copper, this daily copper, I see by the way that these Bollinger Bands have gotten really tight and sort of flattened out. They're parallel. I know the market's pretty much dead. And then when you start to see the Bollinger Bands open up a little bit, that means there's volatility there, and we're probably looking either to play a breakout or maybe a pullback on a trend, which is exactly what you got right there with a beautiful entry. That's how I use them. I don't trade them as tradable levels like we do with the Piranha strategy. I don't do that. If you read Bollinger, his work, Bollinger on Bollinger, you'll notice inside of the text, John Bollinger doesn't recommend to trade him as support and resistance. He recommends to trade him in concert, either with a given strategy, like the Bollinger W, or other indicators as a confirmation devices. So, they're not really intended to be support and resistance levels. They're intended to tell us what price is doing relative to what it did. Meaning, what does the volatility look like compared to what the volatility just was? And we do that by basing it off the bar ranges and sort of always think of the Bollinger Bands as just sort of being an envelope, but it's like a moving average. So it's an envelope, a price envelope that moves with price and adapts to what we're seeing relatively currently, especially if you use exponential Bollinger Bands, then you're pretty current. All right, let's go ahead and take a look at silver here. Silver is an interesting market right now. A lot of folks really love silver, and they should. There's a lot of reasons to really love silver. The reason that most people do is they want to get into a safe haven. They want to own physical silver, which is great. The thing is, it's a heck of a lot cheaper than gold. So we could show up and actually buy some ounces of silver and not feel too bad about it, whereas buying an ounce of gold right now is a major financial commitment. It's $4,000. It's an interesting type of a dynamic, that's for sure. Something like this, though, you can notice my big red line. That's going to be my 13-week EMAs right there, 44.77. I'm watching 45 closely. I think that if we break this 50% and get down into this weekly golden zone, that's a pretty darn good level. That's a tough one to ignore for the silver market. So if you're in silver, if you're holding longs, that's why we talk about washouts. I mean, what is happening? Is something fundamentally happening to the silver market? I don't believe so. But what we're seeing is a lot of retail longs, a lot of mom and pop longs that are getting squeezed out. And now you're seeing sort of the market. My guess is the market pulls back. I think 45 is going to be really tough to beat. That's going to be an entry point that's really tough to beat right here in this golden zone. You might even get a shot at 43. I really like my moving average there, though, at 44.77. So 45-ish, maybe 45 and a quarter. That could be a great bid as we roll forward into Q4. That could be the trade of the year. I mean, I'm not a hype person. I don't like hyping numbers because anything can go wrong with these trades. All that has to happen is the right market driver steps in, and you can see support levels get destroyed or resistance levels get destroyed. So the technical level itself isn't exactly what you bet on in this type of situation. You're betting on that trend continuing. You're betting on the fundamentals here being really lining up with a potentially spectacular entry point. I mean, if it was just a week ago, if somebody came to you when silver was up here at 52 and they were saying, what if I would sell you some silver at 45? You'd love it. You couldn't believe that you were going to get that price. I'm very, very surprised gold and silver have taken this big of a pullback here to close last week and open this week. I think that it's a tremendous opportunity. I'm watching gold out of the corner of my eye. We're seeing intraday compression right around 4,000. I think we're going to get break and get that next level up to 411, but we'll see. We'll see how it works. A lot of volatility, though, a lot of angst, a lot of things going on. Let me see. Lebo, has the government shutdown had any significant impact on the markets? Yeah, I'm going to give you two areas where we're really headed for trouble in this shutdown. Now, government shutdowns, by and large, are political standoffs. That's what they are. One side doesn't want to budge. The other side, pretty much the majority party, which is the Republicans in this case, they just want the government to get up and run in business as usual so they can move on with their agenda. Well, the minority party, here's the Democrats. They don't really have any power to speak of in the government right now, but one thing that can be done is this government shutdown. They can negotiate through the shutdown to try to get some concessions to what they want. Now, is it right? Is it wrong? I'm not going to sit here and get on my soapbox. I don't know. I'm not on Capitol Hill. I do know this, though. In the beginning, the government shutdown was nothing. Nobody cared. I didn't care. I said, well, we've seen these before, and it typically comes and goes within a week. Realistically, the Republicans needed to get 8 votes somehow, and typically what that means is you write some things into the budget that benefit those 8 people's districts, and they take a little bit of something home for them, and that helps them with their voter base, and then they got a deal. We're not seeing that this time because we're seeing the potential of a major turnover in Democratic leadership develop. So you have a stalemate. You don't really have any way to make a deal because the folks, in the minority party, the Democrats aren't interested in doing it. The Republicans aren't really interested in giving them concessions. So you've got a logjam here. And from the beginning, I said, this is politics as usual. Well, here's where it's going to get interesting. And here's where the rubber hits the road. This is why I predict you're going to see the government reopen here this week. I think it reopens in 3 or 4 days because the stakes are getting relatively high. SNAP benefits won't go out November 1st. The well has run dry, the USDA says. The U.S. Department of Agriculture, the SNAP benefits are a food assistance, essentially. And the food assistance, which they go out to a tremendous number of Americans, 40 million people. 40 million people get benefits in one form or another. And these SNAP benefits are going to go out November 1st, which is Saturday, right? If they don't figure out a way to fund the government, that's 40 million people that aren't going to get the SNAP benefits. And then you start talking about food being an issue. you're going to see some real things happen, potential civil unrest like we haven't seen in this country in a very, very long time if these benefits aren't met. Now, what happens then? Look at your precious metals. They probably go up. What happens to your markets? Don't be surprised if you see some pain in the stock markets. Uncertainty in all of its forms will drive prices down. Shane, how could this actually impact the stock market, though? What will happen is if the U.S. government doesn't reopen relatively soon, and you can't meet obligations like this, the SNAP, whatever you think of the programs, that's immaterial. It doesn't matter. The big thing is these were commitments that were made that aren't going to be fulfilled. What do you think is going to happen to the United States debt rating? Do you remember in Biden's last year, I believe it was a year ago this spring, that last spring, Moody's, they came out, they downgraded U.S. sovereign debt. Always carried a AAA rating for, 100 years or something, and then they downgraded it. If the government stops paying its bills indefinitely, you're going to see the debt rating of the United States start to get downgraded. That will send shockwaves through the bond market, and that will spill over into your stocks. I think that the top side, it just helps the top side for metals. You're looking at gold and silver, those markets are going to go up. Stocks probably going to come down. Crypto may come down just because a lot of folks are going to view that debt rating as a reason to take risk off the table. I'm fascinated by watching that because that could be something that we just aren't ready for, that's unprecedented. So you're going to see that potentially, that comes across the board. On Saturday, there's one other situation that's developing. Not many people are talking about this, and they need to. The air traffic control system and the TSA, these folks are also paid by the federal government. And you're starting to see, and these are secondary stories, and they're not stories getting much traction. This could be huge. Now, if you don't have air traffic controllers, you can't fly planes. You can't land them. They can't take off. You can't direct the traffic in and around these airport hubs. And if you don't have enough folks, or if they're overworked or something, the probability for a mistake goes up, and the mistakes at that level are catastrophic. Okay, so now we have a problem with air traffic controllers. Well, what happens to the logistics? If you don't have controllers, not only do passenger jets get jammed up, but what about the delivery of goods? What about things like FedEx? What about all the transport planes? This has the potential to be a major logjam. More than 8,000 flights delayed as air traffic control absences persist. U.S. government shutdown triggers 8,000 flight delays. Air traffic control staffing problems spiked over the weekend. U.S. airports report over 20 air traffic controller shortage incidents in one day. This has the potential to logjam the entire country's air travel, and that will have economic consequences. The airline stocks will take it on the chin. You will see a lot of action potentially creep into the market because you've got a logistic issue. What happens to Amazon if they can't fly their orders all over the country? How about international? We haven't even talked about the international implications. Those two stories are coming to a head this week. So, in my opinion, the pressure will get to a point where they have to make a deal. They absolutely have to make a deal. And I think that's coming very, very soon. So to answer your question, Lebo, yeah, the government shutdown starting to really, it's not necessarily dragging the markets just yet. I mean, U.S. stocks are up today, but something like this, I mean, let's get right back out to price action here. You're seeing silver sort of come off of daily lows a little bit. Look at our gold. I mean, we're making a comeback here. As the angst and the uncertainty increases, there's very little question that those metals are going to catch bids. I would expect them to catch a lot of bids. Also, we expect Powell to probably address some of these things on Wednesday. Is it possible that a government shutdown, if there is no solution in sight, can a full-blown panic develop? I think anything's possible. I'm not saying that it will. Listen, I'm not a flamethrower. There's a lot of guys out there that are just throwing those flames, trying to get everybody worked into a tizzy. I'm not doing that. We're traders. We need to sit here and say, okay, what's going to happen to our markets if the shutdown, if it reaches critical mass and you see maybe some riots, maybe some food riots, maybe you see some businesses getting torched just in a riot type of a situation, people going to get their food. I mean, it's an unpredictable situation. What happens if the U.S. airlines, air travel, logistics is in a complete logjam? Let's say it's in a logjam for a week or two. Then where are we at? Those types of things are going to drive bids to safe havens. There's no question in my mind. Can they be rectified? Yeah. If the deal makers want to make a deal, they'll make a deal. They'll go in and they'll vote for funding, and they'll say, okay, this has gone on long enough, and then they'll back off. Somebody will back off or somebody will get paid. Does it happen this week? I think so. I would be very surprised if the U.S. government lets those scenarios I just outlined happen, because it really does start to break down the infrastructure of the country. It will hurt that debt rating. You can take that to the bank. If that debt rating comes down a little bit, that's gonna shake things up in a big way. So even though it's sort of a non-story that those of us that aren't directly impacted don't really think of every day, we've got to be aware of it. And as a trader, I sort of say just be ready for as many scenarios as you can be. Is it worth going short in anticipation of those things? You can do it. It's a gamble, though. If those things don't happen, hey, listen, if you hear that a deal's reached, tomorrow or today, then your market's probably going to press much higher. That's going to be interesting. It's an interesting dynamic right now. All right, one last check on gold. We're very close. We're very close to that 4,011. This is panning out to be just a fantastic, really beautiful move right down to our support zone, and now we're trickling higher. I would be really surprised if we don't get paid off right there relatively soon. But I'm watching it closely. We'll see how it develops as we rock on. That's what I say, rock on. That's all you can do. All right, everybody, I'm going to go ahead and sign off. We got a couple questions here, and then we're going to go ahead and move on till tomorrow. Let me see. Ahmed, Shane, do European indices like the France 40, the UK 100 usually affected by Fed cut that much? In my opinion, I would say that they do react, just because you're always gauging the cost of capital one country against another. And let's say the U.S. cuts their interest rates down to nothing and the Eurozone decides to hold them higher. Theoretically, that's going to be a drag, like on your France 40 and your FTSE. That's probably going to be a drag on those, just because the investors would look to put the money where growth is going to be, and that would be in the United States. However, I don't really think you're going to see the huge action that you see on like the U.S. dollar or commodities or something like that. It really is about interest rate expectations, though. If one country goes dovish, typically that country is going to see an appreciation in their local stock markets. We've watched Japan, the Nikkei. That's a prima facie evidence over the last decade. Take a good look at a long-term Nikkei chart. That thing's just been like that. Periods of consolidation and then steep breaks. And a lot of that's predicated upon a dovish yen. For sure, no question. Let's see right here. Does a shutdown impact the economic data and reporting numbers too, TM? Absolutely. Yeah, the economic data. We got our last piece of economic data, or our first one this month, I think, was last Friday on CPI. And remember what the CPI report said? I made sure we stressed it. That data was already built. Those reports were just sitting on a shelf somewhere. Our NFP numbers are sitting on a shelf somewhere. So I think that it's had an incredible impact. It's going to throw the timing off of Q4, a lot of things in Q4. So we're interested. It's an interesting time to be a trader. There's really nothing else you could say about it. Let me see, like a delay in reporting. Yeah, T, the delays have been just brutal. The CPI. So you're going to have CPI that dropped last Friday. We covered that CPI live. This Friday, core PCE, that's your next set of inflation number. There should have been a couple of weeks in between, and there's not. There's going to be a sort of on a compressed timeline. This whole thing, I know it's really hard to predict a market crash or hysteria, but you can see that we have the components here to get a bona fide panic going. Government shutdowns, uncertainty, maybe all of the U.S. government data. What's Jay Powell going to possibly say Wednesday? Is he going to talk about jobs data and CPI? Is he going to talk about official data sets? There's nothing to say. Supposedly, they don't know them yet. I'm fascinated to see what the man says. What's he going to say? Absolutely, Blue. You're welcome. All right. What is the government hoping to achieve with this shutdown, Lebo? What you have is you have basically two warring factions. The Republicans and the Democrats. In the old days, they would get together and find some common ground. Over the last decade or so, it's just more and more divided, and nobody's really going to cave. What they're hoping to achieve, the Republicans are sort of sitting there going, listen, we've all voted to pass the bill. We want to get this thing going. The Democrats are holding out for they want to really get some health care concessions. They want to get big time funding on the health care end of things. They also had some other social programs in there, I believe. And they're sort of sticking to their guns at this point. They're saying, well, we're not voting for the new budget until we get what we want, X, Y, Z. and the Republicans aren't willing to compromise or get in on it. It doesn't matter who you think's right or who you think's wrong. The bottom line is they're in gridlock and it's shut down. So there's a high political cost that's being paid right now. People are taking notes and they are watching who's voting for and who's voting against. And with the midterm elections, you hate to already be in an election cycle, but you've got the midterm elections that are next year. So we're almost going into another election cycle here in the United States. That's going to kick off, in earnest probably next March, or when's the first? February, late February. So this is like a battle, a political battle, and everybody thinks that they're winning, and most people in the government are probably losing because it looks bad when you can't do business. If you can't get together to do business, I really don't know what the point is. I mean, all you got to do is, okay, well, we're going to go ahead and get a budget going, and, they can't do it for whatever reason. So the implications are unprecedented. We'll see. All right, guys, I'm going to go ahead and sign off. These streams have been going long, that's for sure. We'll have the Switch Markets newsletter out for all of you Switch Markets clients. That's going to be dropping before the London session, and then I'll have my picks of the week. If you guys want to check out the picks of the week and sort of the technical analysis, be sure to check out the Switch Markets on YouTube. That one drops every Tuesday as well. We'll put a video out tomorrow. That'll sort of give you what I'm looking at tech-wise. We've got from my technicals anyways, we've got a lot going on, and we're going to be looking probably, I got to see exactly what we're going to dive into, but I'd be surprised if we weren't looking at the metals markets. We have to. I mean, they're so hot. Maybe a little bit of crude oil, but crude oil is really slow. We didn't even cover it today. 61.49. I'm still bearish there, but we're very, very flat. Very flat, so we got a lot going there. But definitely we got to go. Let me see. One last comment, and then I'm going to sign off. Let me see. Emmanuel, I blew my account today. My 1.4 thousand account gone in minutes. I over-leveraged. Learn as much as you possibly can from it, Emmanuel. Go back in your mind's eye and figure out why you placed the trade, why you took the position, what you were hoping to accomplish, what your goal was. Was your analysis spot on? What happened in the market that made you lose? Why did it go against you? Get in there and learn as much as you possibly can. Just because you lost the 1.4, the $1,400, just because you did that doesn't mean that you can't learn as much as you can from it. Learn as much as you can from it. We'll tell some losing stories some other time. I've told a few of those over the last month, but believe me, I feel your pain. I've been there. There's a lot of folks in this room that have been there. So the biggest thing to do is keep your head screwed on straight. Sit down, learn as much as you can. Don't let the loss be in vain. Learn as much as you possibly can from it. All right, guys, I'm gone. Have a great day, everybody. Trade the action well, and we'll talk soon. See ya.